Good day, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. Good
Good
day,
day,
everyone,
everyone,
and
and
welcome.
welcome.
Before
Before
we
we
start, we
start,
have a
guys.
disclosure. Please
Please
be
be
aware of
aware of
risk in
risk
the
in the
future.
future.
Sorry, guys. And we're not your financial advisor, so whatever you do, it is at your own risk. This is an educational uh, day, and this is not a trading room. So whatever you do, please, you are at your own risk, and we're not your financial advisor. We normally start around 10 o'clock, so we still have 7 more minutes to go. And this, in the meantime, we stay on silent, and we will try to analyze the market for Friday, uh, and we'll see where this market going. Thank you. Okay, good day everyone, and today let me show you what happened earlier today so we understand what happening. And I want to show you something else today. Um, if we look at the NASDAQ, the auto trade earlier took a beautiful trade. It's not about the trade, right there. But from that clock, a little around 9 o'clock, the NASDAQ was in yellow, in neutral. So this is very important to our members. In this cases here, if let's say you wanted to start an auto trade and it is like this in yellow, stay and wait till you get color, because this is not an ATR. So you wait and then till you get color and you start auto trade. We don't want it, God forbid, we don't want anyone, if they don't want it to take manual trade, is fine. Another things also, when this is a special message to our members, and the question is, they were told by people selling auto trades, what they told to their traders: optimize the auto trade, find a proper time frame to start the auto trade, and then you auto trade. Here is a couple of video how to optimize. Have a nice life. But the reality is, nobody knows at 9:30 how the market is gonna function, or could be today the spike is 9:30, could be 11 o'clock, could be 1 hour before closing hours. Anytime for any of our members, first of all, when you see a yellow, hold your horse on turning on an auto trade. The second things you need to look out for, when you see the market analyzer, let's say as an ES here, those are 3 steps. If you follow every morning before you start your auto trade, that can save you a lot of money. When we see the ES to the short side and there is 2 positive, if you notice here, if we look at the CL have a 3 negative. On the ES we have 1 negative, 2 positive. What does that mean? The market is not in sequence. Another things we need to look at, we need to see 3 negative on the ES, 3 negative on the NASDAQ, and 3 negative on the YM. This is indicate that the market is going in one direction, short. And if in this cases here, you see the NASDAQ is two positive, 1 negative, 1 negative, 2 positive here, this means the market not trending. This is an indication of this market not trending. When the market is not trending, your auto trade is in trouble. Despite what you were told by amateur traders selling auto trade, cannot trade a paper bag, and because those guys, they cannot support their own customers, so that they try to find a shortcut and throw this customer out in the cold. So those elements here, always you have to look at before you start any auto trade in the morning. And the most important third step, which all those takes 5 minutes before you start your auto trade, is where you look at the blue chart. 1 minute. Because you are a day trader, we don't look at 15 minutes and 20 minutes, because we already have the trend on the top telling us what is the big time frame, the high time frame, which direction is going, so we don't need to put the 10 minutes and the 15 minutes. For the last few years, it's no longer for a manual trader to turn on a 1 minute chart and trade from it. If you don't have a 3 different time frame, 3 different chart for manual trading, you cannot manual trade anymore. It's finished. So instead having 3 charts, we can look at the high time frame. We can see where is the direction. It says on it high time frame, and then is going down the high time frame, and this is the 1 minute indicating if we are going to the right direction with the high time frame or not. But this is not the most important as much as the fibs. If we look at this, any morning, you wake up in the morning and you see this, is a bad news for you. When the market is not moving, let me show you what happened today on the ES. It was one straight line earlier today. Look at this. From 7:23 to 8:30, 1 hour, the ES was one line, was not moving. For the amateur trader, he don't know what does that mean, because he thinks he have an auto trade. But if we looking at this situation here, and if you are auto trading, where is the money coming from? The market is not moving. Where is the money should come from? Whether the trader have an auto trade on $200, $1,000, $5,000 target, is irrelevant. Where is the trend? No trend. Where are you gonna get your money from? The market is not moving. It's not generating takes. You're trying to pull a hair out of a bald-headed man, and there is no hair. If we started the auto trade at 7:24 all the way to 8:31, where is the money gonna come from when there is no trending? However, when the market took a dive, the auto trades start making money. Every morning when you get up, the first things you need to do before you open any auto trade or release any auto trade to the market, to see where you are in the market. When the market is not moving, you will see the fib lines are very tight to each other. When the market is tied to each other, this means there is no trending in the market. When there is no trending in the market, you're going to lose money. I don't care who you are, whether you have a blue eyes or a brown eyes. I don't care what auto trade you are using. I don't care what optimization you have done on your auto trade. They become irrelevant. Because the guy is auto trading is no different from the guy is manual trading in this condition here. Only illiterate traders cannot see it, and they will not see it, and they will lose their money and they will go away. They are just tourists in this business, and they will leave. One day they will leave. They fail. And if we look at this is a very bad news. Now, if you want to challenge and you tell me, well, my auto trade is making money, we have a plenty auto trade we can bring down, and it's making money. We can start bringing all kind of auto trades making money. But it's not that. What we wanted to is a very important, the first trade to be winning trade. For me, it is more important to relax and to be the first trade is a winning trade. So what is the condition when I wake up in the morning and I see big mess in the market? Two options. If this market across this turbulence, all those fib zones, all those support, resistance, once this market break that area here, it's a clear sky here. It's tradable. Anything from here is set to tell you all the way down to the 38.55 is not tradable. Eventually will change, but at the moment, anything below the 38.80 all the way down to the 38.53 is not tradable. Why? First of all, we have a heavy resistance here. We have a heavy support here. Heavy. So what's happening, if we are going to look at this ES, is struggling to break this one at the moment. There is many resistance line in there, and there is a heavy support. What happened to this ES? Become like a pinball machine, pinball ball, going from one wall to the other, trying to find an exit. In those conditions, you should not even think about auto trading until this market is tradable. Gentlemen, 90% of losing trade coming from the amateur trader illiterate to read the market. He thinks he have an auto trade, should work like his dishwasher machine in the kitchen, and he don't understand. No matter what you tell him, he's not gonna get it. Then you give up on him, and you look at him, and you start seeing him sinking day after day, and his money melting, and he still don't want to get it. Those are hopeless people. You should not waste 1 minute on them. This, if you notice here, the ES is going back and forth. It's not doing anything. And like what happened yesterday when the market is trending. Once this market break out this area here, anytime the market break major area, has to go back to reconfirm. Remember that. So if this market able to break that area here, it's not gonna fly to the 39.13 within one shot or with one bar. No, it's not gonna happen. What happened when the ES break a major area? First of all, the ES is an oxygen for NASDAQ, Dow Jones, for the whole industry in the market. Once this market break that area, you have two options. You can take a breakout, is a high risk, or pull back re-entry. When the market is gonna break this major area, if you notice the ES, look at it. Look. Now the ES is hitting 1 bar, 2 bar, 3 bars, 4 bars, 5 bars, not able to break that area. The question is, what you want to auto trade in here? Just because you turn on your auto trade? What you want to auto trade here? There is nothing to trade, neither auto trading at the moment. Once this market break, because we can see the pressure in the market is about to break. Once this market break, we can stand still. Two options. You can trade on a breakout. Once this market break out, is a higher risk. No matter how far this market is gonna go high, it has to go back to reconfirm every single number. And this is where you start shining. This is where is your money when the market go back, reconfirm. For the last 27-8, and now we are going to the 28 years, the only thing I know still working in 28 years, confirm trend, pullback, re-entry. You remember that. Confirm a trend, pullback, re-entry. In the last 28 years, many smart systems came in, and they come in fast, and they left the market faster. They fell. The only thing still work in this market, one theory, and there's no other one. Confirm a trend, pull back, re-entry. Confirm a trend, pull back, re-entry. And when this market goes up in this area, sometimes in any given day, it could be false alarm. And it could go 1 bar and it fell, and then go and drop all the way to the 38.80. So for a guy is reasonable enough, he should not believe the first bar jumping out of the resistance. He just laugh about it, relax about it. Once we got the confirmation this market is holding above that number, or is holding above, it used to be resistant and now become a support. Once we confirm the support is holding, that means you have something to lean on. So if when you are taking a trade and your stop loss below that line here is very well protected. If we notice here, this market, look at it, fell. And what happened? We know what's going on. Should I turn on an auto trade in here? No. A guy fell the first step in the market. Those are the first steps in the market. Every morning you have to do it. You might screw up 1 week, 2 weeks, 3 weeks, but then you get to learn the habits of this market. So auto trades are not magic. Amateur trading, no success, absolutely, no matter what you give him. If his brain is locked, you cannot have an access with his brain. He has no success, you know. So in this market, you have to be more elastic and open up to understand the situation you are in at the moment and how we need to react to it, respond to the market situation. So every morning, this market is in a different situation. We need to adopt what's going on, accept what we are looking at, and then make decision whether even we want to turn on an auto trade, we want to hold on for 5-10 minutes before we turn on the auto trade, or if it is you don't feel good about this market today, skip the whole day. There is nothing wrong with that. Especially on a Friday, you don't want to have a ruined weekend. So if the market is not coming to your standard, let it be, leave it alone. Next week, we dance again in the rain. and then maybe we will get something out of it. So if we cannot find a trend in the market, if we need to skip today, let it be. Don't force yourself into a trade when you don't see trade or you don't feel good about the market the way it is. So as we see right now, this market was sitting for a long time, 1 hour straight line, went up, went down, got jammed in the channel here, and now the way the ES is sitting right now, you don't need an auto trade, you don't need an indicator. What you need to do, just flip a coin if you really have to trade, and then make a decision on when you flip in the coin, because there is no direction. When there is no direction in the market, now you're trying to burn your account. So the market is now trying to break that area. Now we start exiting out of this channel here. No matter how far this bar is going, has to go back to this line to reconfirm. So once this market close, the bar close above, now we are out of the mud hole in the market, and now those guys maybe decided to go ahead and take it up, and then we are waiting, and then we can unleash auto trades. What you were told by some illiterate people selling auto trade, that you can optimize where is your average morning hour to start your auto trade by optimizing. This way he can shut up the customer and send him away as fast as he can. But the reality, there is no optimization. Is gonna bill you out of trouble when you start your auto trade and not looking in the 1 minute. Because this guy don't know how to look at chart. How he's gonna teach his traders to avoid trouble in the market when he cannot even see it. He's blind. So always try to protect yourself and get more educated or be aware what's going on before you unleash the auto trade in the morning. And there is nothing automatic in this life. There is nothing just automatic. You just turn on the button and you're gonna live happily after. There is nothing. No matter how far this ES is going, it's gotta go back to confirm this area. It's gotta go back to confirm that area. And then this is one of the oldest trick for a manual trading. You let it go on the first breakout and you sit down and wait on it like a duck. You sit and wait till it goes back to the support area when it needs to confirm, and you take the trade. You can decrease your losing trades by 80% by being patient. Another thing now, if we notice on the ES, now we start getting a new phase in the market. Now we have 3 positive signals on the ES. The Nasdaq is not responding yet. That will be better when it starts responding. And once this market synchronize the ES, Nasdaq, Dow Jones, no matter what you do, whether you are auto trading or manual trading, once you see the market analyzer, all 3 signals ready to go. The Nasdaq, all 3 signals ready to go. The YM, all 3 signals are aligned, synchronized. No matter what you do, you cannot go wrong with your manual or your auto trade, because when the market is in sequence, there is only one direction, is to make money, long or short. When there is confusion in the market analyzer, when you have signals are up, some of the signals are negative, some of the signals are positive, this is where the confusion in the market, and absolutely it will not be trend. When there is no trend, there is no money. When the market is sideways, you lose money. So now the market is start going up. The Nasdaq start responding. If we look at this, and now once this market got out of the channel, everything is fine. The bar close above that line is fine. Is any pullback? It will be pullback. It's a matter of time. But this is it. It could be news. Could be sometimes when you are trading, there is a news. It's going to make the market fly. That's very fine. But we are out of this hole. Once we are out of this hole, this channel here, the market is in a perfect condition. Now we have the ES on, the Nasdaq on, the YM is going to follow. Now we are set and we put our ground. So now if the auto trades start flying up, and all of them now they start in the money. Now if we take an example, when the Nasdaq was not trending, as an example, when the Nasdaq was not trending, you can see the Nasdaq auto trade was in trouble. When the market is trending, you are on the money. We'll take another example. Any chart, we take Russell, there we go, trouble. When the market start trending, you start making money. Every time the market is sideways, your auto trade is going to get in trouble. To prevent the sideways market, we need to look at this to make sure we are out of a channel. The market is not jammed between resistance and supports, and once the market start breaking out, you're fine. If we notice here on the ES what it says, the market took a fly all the way to the double resistance. Now the R4 is telling you reversal. The reversal is not a repaint reversal. And we have explained yesterday, where is the yellow lines? Where is the market? And the yellow lines. This is where you take your profit. It might gonna go one more bar or two more bars. But once it gets to the yellow, take your profit or unload half of your profit right there. If you are trading on two contract, once this market enter this yellow lines, take one of them out, release it. Now we have the reversal. The market, there is strength in it. It might climb a little bit more, but we know where is the re-entry point, and we can unload it, unload half of it, and then if they wanted to drag it up, I don't know if it's gonna happen. Today is a Friday, it's 10:31. If they're gonna go ahead and exceed this market to the target 1 and target 2 before 11 o'clock, we will find out, because this is what happened on a Friday. Around 11 o'clock, you have the institutional number. The institutional number today is 39.25 on the ES, and profit taken 39.35, also an institutional number. So I don't know if we are going to go all the way up there at the moment. I don't know, but this is, we will cross that bridge when we get there. And now if we look at the ES 3 positive, Nasdaq 3 positive, and the YM 2 positive, one negative. It is going to turn around for positive, indicating this market is going up, indicating if we are auto trading, we are taking a long trade, it is very well. Then what we do, we look at the technical. If we are taking these trades before, it's fine. Once we get to this area here, I will not advise any auto trade to generate a new trade in this area here, because there is a good potential right now to drop back to the exit place where the breakout was at 38.95. There is a good potential to drop back to this number. So taking a profit between those two yellow lines, half of it, all of it, some of it, is very wise to do that. So if we notice here, the market give us a reversal, and now start giving us the second reversal, and it's telling you, and the trend exhausting, firing negative. The trend exhausting, firing negative, and you have two reversal telling you that this market it might be slowing down, and there is a possibility to drop to the 38.94. So why hang in here on a full throttle with all our lots in there where we can unload half of it and we leave the other half? Or if we are trading two, we can take one exit and we can leave the second one as a runner. If this market goes up, we start tight up the trailing stop because we don't want to lose any of the profit, and then we exit. The trailing stop should be manual. You can do an auto trailing stop on any single auto trade we have, but as I explained yesterday, the auto trail is not my favorite piece of cake, and it can be, you will never see big trades like this when you are using a trailing stop. You will stay low with an average of couple $100, $300 trade. So if we wanted to secure some of the profit, that's a total different story. It's the same story here on the Nasdaq. It is between the two yellow lines, and it starts firing reversal, and it is between those two yellow lines. So let's say if we are happy with it, you can right-click on the chart and you can secure the profit. You can secure some of this profit and you put one, and then if this market drop, you're done for today. If the market goes up, you can move your trailing stop manually, not automatically. But this is an indication of this market. Look at this, what happened to the Nasdaq is very clear what we are talking about. The market broke that resistance line, and look where it is. The Nasdaq broke a double resistance, and look where it is, right there. Every time you have a double resistance, the market go back to confirm you have money. Every time the market break out, coming back to double support or resistance, you have money. Always. So now if we look at the ES, Nasdaq, Dow Jones, look at this. Positive 3, positive 3, positive 3. The market now is in sequence, long trade, and there is nothing to concern about. And we know right now the market is trending, and we can see from the market analyzer we are going on the right direction. We have a reversal fired, giving us warning. the trend is about to be done. We have entered the two yellow lines. That's mean we can take some profit off. And if this market decided to go all the way up to the target 121.68, profit will be taken on the institutional number, and then it goes back all the way to the 21.15 as a support area. So you can see the market's still in between this the yellow line, and it's no longer pushing hard. Maybe this is the third reversal fired. Can they bring it up? Maybe they will. I don't know. But you can see how this market is really running out of steam. Maybe they are able to push it to target 1, and maybe they fell right now. It might drop to the double support area at 39.07, and we'll see what happened to the market. Simple as that. On the Nasdaq, profit taken right there. 121. We're not your financial advisor. We just read in the market. Whatever you do is up to you. The institutional number on the Nasdaq is 121.69. Look guys, what we talked about, this is the first breakout, broke the second resistance, confirming the first support. You see, it's confirming the first support. If it's not hold, it's gotta go back to reconfirm. It used to be first resistance, now become a second support. Always the market has to confirm areas. Look, you see? And the ES stopped. If this support area not able to hold, we're going to the second support area to confirm. There is nothing move freely without confirmation. So if this one can hold, there is a good potential, maybe it's 1055. The chances by getting those targets is getting weaker because it's in the between those two yellow lines, as we said, and it takes a lot to get here, but we'll watch it. If this area hold, we're not dropping to the 38.94. If this area cannot hold, we're dropping to 38.94. This is exactly where it started from, a breakout. Simple. So we know where we are in the market. Decision is made based on the market movement, not auto trade. Market movement. Auto trade, one thing, market movement, another thing. So we'll keep our eye on the market and see what happens. Folks, that's all what we have for today. I wish you a very happy weekend, safe weekend, and again to our members, we don't have webinar on Monday. We do not have webinar on Monday. A little summertime, and And we thank you very much and wish you a pleasant weekend. Bye for now.